This section is all about trading rectangle chart patterns. So what is a rectangle chart pattern? Well, it's a chart pattern that's formed when price is bound by a parallel support and resistance level. You can see here that we have two parallel lines, the resistance line up here and the support line down here, and you can see that it forms this box. It looks as though the market is just stuck right inside this box, right? The market keeps bouncing off of this top resistance line and then coming down and hitting this support line and bouncing back up all through here. Once the price does break out of this rectangle on either the top or the bottom, it can continue in that direction for a while and you can get in on some good profit. So we're going to talk about two different types of rectangles, the bearish rectangle and the bullish rectangle. Starting with the bearish rectangle, this is formed when the price consolidates for a while during a downtrend. You can think of it as though sellers are catching their breath for a minute. So here we have the downtrend, and then you see that it's just kind of stuck in this box as the sellers catch their breath. And then once the price falls below this support line right here and breaks out of this box, it's going to continue even lower. So a good place to have your entry order would be at the bottom of the rectangle right here. You could do a sell stop, or you could simply click sell once you see the market go below here. And then a good tip is that usually the market will move about the size of the rectangle pattern below the rectangle or above the rectangle. So a good place to place your take profit, for example, could have been right here. You can see that in this example, it shot down even lower, but this is usually a pretty sure place to put your take profit. Would be the same height as this rectangle. You get in right here, and then your take profit would be right here. Now, a bullish rectangle is just the opposite. It's going to form during an uptrend when the price consolidates as the buyers take a break. So here we have an uptrend. The buyers are taking a break here as it's kind of stuck in this box. Then what we're looking for is to buy once the market is able to break out of this rectangle on the upside or break past this resistance line up here. So you could have put a buy stop order in here or simply click buy if you're watching the market once the market broke out of that rectangle. Once the market does break out of this rectangle, then you can get into your buy right here and you can set your take profit about the same height of the rectangle is usually what we suggest for that. So hopefully you're able to recognize these rectangle patterns in the market, and this will help you to catch these breakouts before they happen and win more trades.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.